gentlemen, good day and welcome to the Bharat Forge Limited Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kalyani, Joint Managing Director, Bharat Forge. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen, and thank you for, first of all, adjusting to our change in time at the last minute. Unfortunately, we had a lot of discussion in our board meeting, which went a little longer than expected. It was a very good discussion, and therefore we had to push out the call. As is normal, I'm Amit Kalyani. I have with me our finance, investor relations teams, and we have our head of our components business also on the line. I'll take you through quickly a few highlights, and then I'll be happy to answer your questions, which I and our team, the whole team will respond to. So in terms of our standalone business, we had a top line of about 2,127 crores. This was almost 21% YOY growth. Our EBITDA was up by about, again, almost 20.3% to 553 crores. Margins have been maintained at 26%. PBT before exchange gain or loss was 421 crores, 26% growth over Q1 of 23. We have won over 200 crores of incremental new business for the components and automotive business. In this quarter, our balance sheet continues to remain strong, and net of long-term loans, we have close to 700 crores of cash. Passenger vehicle story continues to grow for us. We have developed new customers, new products, and we continue to see large opportunities for growth, both in engine, powertrain, and also EV-related components. We saw a passenger vehicle growth of about 43% YOY. Despite a one-time destocking impact of about 80 crores in Q1 for the oil and gas sector due to some product changes, the hit on the industrial export business was limited due to continuing strong traction in aerospace, which is now contributing about 16% of our export business. This has grown at more than 50% over last year, and we expect to see a strong double-digit growth this year and next year as well. In terms of the coming to the part that we're most proud of, and let's say it's something that we've all as shareholders, as management, as investors been waiting for a long time, has been the conversion of the defense business into a revenue-generating, profit-generating business, which has started from this quarter, where we have started exports of both systems as well as components in a big way, and this will continue to grow. In fact, we are seeing tremendous traction from global markets, and just in quarter one, we won an additional almost 280 crores of new orders in defense, and we have many, many more orders in the pipeline. So our combined order pipeline now is in excess of 22 to 2300 crores, which is largely exports. This will be executed over the next 18 months, and this encompasses orders across vehicles, artillery systems, components, solutions for naval and unmanned systems. This basically marks the entry of Bharat Forge into the system space in a very, technologically advanced and geographically, opportune and diverse and globally in demand kind of sector. And this business will also very soon contribute to, in fact, this year also should be at close to 10% of our overall revenue and increasing as we keep going ahead. Coming to our overseas business, we had a turnaround in our European business where our EBITDA went to 51 crores as against a loss of 14 crores, so a swing of 65 crores. US operations were similar to previous year, but you have to remember the US operations was set up 2 years after our last European expansion. So the European expansion is now heading to 50% plus capacity utilization, whereas the US is still ramping up and is going through its product development and establishment cycle, which by Q4 should be done, and we should have a turnaround in Q4. Our subsidiary JS Auto has now completed its acquisition of Indoshell Mold SEZ unit for a cash consideration of 55 crores. With the asset as is, including the current environmental clearances we have, this can do a turnover of about 200 crores, and capacity-wise, it can almost double that with increase in our environmental clearance. So now, between ISML and JS Auto, we have a capacity more than double of what we had when we bought JS Auto. In fact, very close to 2.5 times, and we expect to see our growth in the casting space also be very high, in the strong double-digit range, because there is a lot of demand. There's a lot of demand coming from Europe and a lot of shift of manufacturing from Europe to India. In fact, the big strategy that we are now going to push and put a lot of emphasis on is to increase our manufacturing in India and use India as a large export base for the world, both at a component level, system level, and at a subsystem level as well. Our India manufacturing platform, which is basically the components plus products, which encompasses today our Bharat Forge standalone business plus the defense manufacturing in KSSL, is already at a run rate of 10,000 crores and 2,500 odd crores of revenue for the quarter, and we expect to see this grow very smartly and very sharply over the next 2 to 3 years. In fact, we will undertake a large expansion now in various areas. I have talked about casting. This is all in India, and this is all in spaces that we are comfortable with. This is in forging, in machining, in EV-related forgings and components, and our defense plants are also coming online, so we'll probably do somewhere in the region of 1,000 odd crores in the next 2.5 years. At the same time, we will also repay over 1,000 crores of debt in the next 2 years, and we will do all this through internal accruals. We will maintain a healthy debt equity profile, we'll maintain a healthy cash balance, and have the ability to respond to any growth opportunities in India manufacturing or India-related manufacturing growth for global opportunities as well. As we go forward, we expect to see our consolidated EBITDA to increase from 16% towards the high teens that we have always aimed at, and increase our return ratios also quite substantially. In terms of this ISML acquisition, this plant is within 2 kilometers of our existing JS Auto plant, so we don't need to hire a large management overhead. We only need operating people, and we will get a lot of synergies and let's say operating leverage coming in quite soon. We also are getting a lot of interest from our global customers for export demand for casting, and we see that as another big growth driver to improve our India manufacturing footprint and sales outside of India, and to further serve our customers more completely. Talking about customers, our last man standing strategy is bearing results. We have increased our market share in the automotive space, both in India and outside. We expect to see the Class 8 market in Europe and US to remain strong, one driven by demand and little bit of emission norms, the second driven by emission norms upcoming, plus old fleet and drivers being more accustomed to vehicles with more assistance and things like that to make driving easier. And this is what we hear from our customers, and we expect this to remain stable to positive. And we have also tied up long-term business with all our customers, and we continue to grow our engagement and footprint with our customers. And we expect the next few years to remain strong, and that this growth momentum that you're seeing this quarter to continue gaining strength over the next 3 quarters for this year and also into next year as we expand our footprint of products, geographies, sectors, segments, and new fields as well. So that's really all I had to say, and I'm happy to now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, congratulations on good set of numbers. The strategy that the company embarked on of diversifying revenues is beautifully at play in this quarter. My first question is on the defense side only. In the opening remarks, you said that it could almost be 10% of Concall revenue for the year, roughly implying that KSSL will have very sharp ramp up in revenues in the coming 2-3 quarters only. So how do you see that impacting margins? And also linked to that, any update on defense order wins from India side? Given that it's an election year, will that have an impact on wins from India side? So any comments on that? So that will be my first question.
So, Binay, yes, you are absolutely right. It will imply strong growth, but we are already ramping up our defense business, and we continue to see tremendous demand coming from markets across the world. So, not just, we're not, as you know, we're not just dependent on India, but we're already exporting, and we see tremendous growth opportunities. And the capacities we are building will start getting ramped up. We are today producing in our existing facilities. We don't have our dedicated facilities yet. But the point is, yes, maybe I don't want to comment on election year and the impact of election year, but all I will say is that there's enough demand for us globally to produce and sell whatever that we need to in terms of creating growth.
And at what scale do you see the profitability of this business being like mid-teens margin or so?
Profitability, so it is accretive to our overall business. There is no dilutive impact of this. Also, you have to remember that while we are only looking at EBITDA, you also need to look at asset turns. On return on asset basis, it will be substantially higher. Please also remember for the India order, the RFQ is already out. So at least some part of the India order should happen before other things.
Right. And also part of the profitability sits in standalone. So we're just looking at KSSL may not even give the full picture for the company.
Yeah. So you have to look at consolidated because KSSL is 100% sub, and as you know, the components are made in Bharat Forge. So if you combine the two, you'll get a good picture.
And the second point that you made, which is very interesting on the last man strategy, getting orders till 2035. Could you comment a little bit about which components and geographies you are getting?
So we're not going to talk any more detail than this. It's a competitive market, and we don't want to share such sensitive information. All we are saying is that the customers are banking on talking or partnering with suppliers who can supply not just components but also be a technology partner and a strong player for the long term.
Right. Then just any comment on the India PV business, where we've seen sort of this, you said it's a one-time impact from some customer because of which we've seen the revenue dip?
Yeah, so one of the customers that we used to supply to have stopped making the products that we used to supply into. So we are now supplying to other people. Actually, we don't supply into the pass car sector anymore. We supply into the industrial and SUV sector using the same assets.
Great. And just the US break-even, are we on track for third quarter we were guiding earlier?
Fourth quarter. Third, fourth quarter.
Okay, great. Thanks, Amit. I'll come back in the queue.
Yeah.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Good afternoon, sir. Just continuing on the question of KSSL, could you tell us what is the fixed asset base at KSSL and how much capex will be required?
See, the fixed asset base in KSSL is not large right now because please remember it is a integration business. Right now we are spending about 120 crores in building a large facility of about 4 odd lakh square feet, which will be to do vehicles, armored vehicles, rollaway chassis and guns and mounted gun systems. And that will have a very large capacity. It will be one of the largest such capacities in the world.
Okay, so for this revenue ramp up, no significant capex is required. That's how I should understand.
Yes, correct.
Okay. And second, there was also a mention of investment of 150 crores, I think, in Kalyani Powertrain. Could you just talk us through that as well? That what is the plan there?
So we have a long-term strategy, which we created 3 years ago, and we are implementing that strategy. We have a plan for large supplies into the electric vehicle business, and we have to place orders for certain equipment to set up a new plant to manufacture these components and systems, and this is over a 2-year period.
Okay, so this is setting up capacity in that entity.
Yes.
Okay, and sir, at what level of revenues does this business become EBITDA positive?
Which one?
Kalyani Powertrain.
See, you have to look at it separately. You have to look at that investment in torque separately and the rest of it separately. Torque we did to learn about this sector, to understand the technologies and to learn manufacturing of these things, which we have done. The rest of it, is all product specific. As we ramp up to, let's say some amount of steady production. Today what we are doing is we are making a lot of prototypes for a lot of different people and getting them tested, getting them approved, going through a learning curve. So, just like in defense, we took a long time because we are developing the technology on our own, but then in the longer term, it gives you a lot of benefit. Same thing is what we are doing here. Obviously, we're not expecting it to take so long, but I would say at least 2 to 3 years for it to be meaningfully profitable.
Understood. And lastly, can I check on the overseas operations as well? We have seen an improvement in EBITDA margins over there. By when do you see the company touching double-digit margins over there?
Look, for the full year, we will be profitable at a PBT level globally. Okay? Europe will be PBT positive and US will be definitely EBITDA positive for the Q4. But Europe will be PBT positive for the full year in a healthy manner.
Okay. Would that imply margins close to double digits by the exit quarter?
I would say high single digit.
Okay. Right, sir. Thanks. I will come back in the queue.
Thank you.
Thank you. The next question is from the line of Amin Birani from JP Morgan. Please go ahead.
Yeah. Hi. Thanks for the opportunity and congratulations on the good set of numbers. Just going back to that last man standing, comment that you made. I know you didn't want to share too much details. I just wanted to clarify one thing. Since, you have now, assurances from your customers till 2035, and given that at least the global customers are planning to move to a kind of a, net zero kind of a number by 2035, would it be fair to assume that you are going to be a partner for a lot of these new age and EV vehicles also, and you will be coming up with a lot of products there?
Yes, that would be fair.
Okay. And secondly, on the defense business, the order for ATAGs that you had won for the export market, that was supposed to start ramping up from 2Q, or some of the ramp up in this quarter also includes that?
Just very small initial, probably the first of supply.
Okay, so obviously, this number should, sequentially improve quite substantially over the next few quarters on the KSSL side, as well as on your own defense.
Please understand, the order value you guys know, it's also spread out over 18 months.
Yeah.
From the time it ramps up, it is spread out over 18 months. Okay?
Understood.
1 year from the order, it starts and it becomes an 18-month order. 18 to 20. There are two different orders. One is one product, second is second product. The two orders were received at a different time frame, and both there, because please understand, I'm not going to a supermarket and selling my product. The customer also has some schedule by which it wants the products to be inducted.
And the 280 crores of new orders, can you help us understand what components or products is that for?
So that's also both capital items and revenue items.
Okay. Great. That's helpful. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Gunjan Prithyani from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my questions. I just had, again, a follow-up on the defense business. The 2,200 crore order book that you talk about includes only the export order that you have and the other component orders. It does not include ATAGS at all, right?
No, it does not include any India orders.
It does not include any India order. Okay. And would it be possible for you to share, what was the overall defense revenue in this quarter? I mean, I can see KSSL, but there is also some revenue that gets captured in industrial part of the standalone, right?
It's about 250 crores for the quarter.
And this KSSL, just trying to understand how the accounting is getting done. The standalone sells components to KSSL and then KSSL books out to the customer. So it's
Gunjan, we only make components in Bharat Forge. The entire system and assembly is made in KSSL and then sold.
Okay. So part of the revenue...
That is the way it's going to work. Okay? Because KSSL is our company for doing defense systems. Now, some of the early orders have come before KSSL was fully set up. So some of the early orders were in BFL, but all of the execution is going to happen through KSSL going forward.
Okay. Got it. And the second one I had was on the aerospace, because you did, talk about destocking, which impacted the revenue stream on exports. But again, aerospace you quantified. So how, defense is very clear now, but aerospace in terms of revenue ramp up, how should we think about that? And anything you can share from the margin also for that?
Margins are also very good. Please remember that we are using our existing forging capacities to make parts for aerospace. We have dedicated machining capacity which we have set up for this, and we are making extremely high-end, high-tech products. I would encourage you to come and take a look. We make parts like landing gears for commercial aircraft. We make fan blades in titanium and entire balanced rotating assembly for jet engines. These are all jet engines in the 15 to 1,000 pound thrust and above category.
And revenue ramp up, any guidance around it? Or
this year we will see a revenue growth of over 30% over last year.
Okay, just lastly, if you can, talk about the outlook both on CVs in India as well as US Class 8. You briefly touched about it, but if you can just give us some color as to, given the cyclicality in these both categories.
Yeah, so Gunjan, I have my colleague Subodh, who's the head of our component business. He's better, positioned. He's the right guy to answer this. Subodh, can you please?
Yeah, Amit. Yeah, hi, Gunjan. So, Gunjan, to your question, at this point, we see a strong commercial vehicle segment both in US and Europe, and this is driven by the order books and, the backlogs. The expectation is this should continue into next year as well. That is what most OEMs are even publicly stating. As far as India goes, India is already seeing strong traction, including Q1 as you've seen. And again, from if you look at everything that's happening in the country, infrastructure-wise and others, the expectation is it will continue to be stable. It may not grow significantly in India, but it would definitely continue to be stable is the expectation.
And what is this emission related that you mentioned in Class 8? Is there some big bunching up of, advancement of demand that you all are expecting? And I'll join back with you after that.
No, it is. I think the emission was mentioned in light of the advancement of the product that is...
The new car standard coming up in the US and the Euro 7 coming up in Europe.
Yeah, that is in 2026-27.
Yeah,
and it
they
makes
will be
products extremely complicated.
Okay, got it. Thank you so much.
Yeah.
Thank you. Next question is from Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity. Amit, my first question is on the railway side. We had this collaboration with Talgo. If you can just help us understand how are we doing there, how's that business looking, because that can again be a pretty significant part of your domestic industrial rollout, right?
Right now we're looking at components on the railway side. We're not looking at entire systems. It's again a very complicated business, so I think we need to get our arms around it before we bid for something that is a 30-year project. And I think that there are going to be a lot of opportunities in the future as well. So I would wait and watch. I don't know whether that is going to, let's see where it goes. We're in it, but we're not, it's all getting postponed and things like that from the user end. So it takes a lot of time and effort to be in these businesses. We want to be in businesses where the time and effort delivers the kind of value, return, profitability that is, let's say, pays off for the kind of effort that you put in. Plus, I don't want to be limited to a geography. I would prefer to be in a business which is more globally, accessible to us.
Fair enough, Amit. I think can well understand that. And Amit, the second part is on the KPTL business because looking at the various components, what you do, there's quite a lot, right? You're doing your advanced lead-acid battery, then power electronics, it includes MCU, everything. But which part of the component chain where you strongly feel that you're going to be building a sustainable edge, which will attract a lot of the OEMs towards you? Because what we're seeing is a lot of the OEMs are wanting to or already doing a lot of these components in-house. So in that context...
No. See, actually a lot of what you're asking me is our strategy. If you look at us globally, we are a niche global player. We don't play in commodity spaces, we play in high technology niches. And we will adapt the same to the EV sector. At a component level, we will supply to all the OEMs and the tier ones and the new emerging customers. But we will select a few niches in that where we will go deeper and wider.
And so is the understanding right that you would be focused more on the international side rather than looking at the Indian value chain, or am I
we look at both, but please remember a large part of this manufacturing is going to happen in India.
Fair enough. And Amit, generally any color on the industrial side, non-defense vertical for the growth outlook, because given how the capex story is evolving in India, anything which you can share on how that progressing, sir?
On the industrial front, also we see a lot of opportunity. In fact, we have targeted 2-3 new sectors. Again, I don't want to go into those very quickly, because we are still playing those out, but Subodh, maybe you can generically touch upon this.
Yeah, sure, Amit. So as Amit mentioned, we are addressing a lot of new areas in addition to the area that we have, and these are spread across engines, these are spread across. I have
you have a bad network. At least I'm not able to hear you.
Same here.
Yeah, Amit, it's a problem for me.
Okay. Go ahead, Subodh. Go ahead. If you can, go ahead. Otherwise, I'll try and fill in wherever possible.
Are you able to hear me now?
Yeah.
Okay. So I was saying, we are having a very wide range of industrial segments, which is, right from heavy engines and, products for construction and mining industry and so on. There are a lot of different things happening where we are adding new products, where we are adding new customers, we are adding new services. And at this point, the outlook is positive for India, of course, with everything that's going on, but is also positive for the world. And, it's any industrial business has its ups and downs, but overall, we see the outlook as reasonably positive.
Fair enough. Thanks a lot, and wish you guys all the best. Thank you.
Thank you. The next question is from the line of Pramod Amte from InCred Capital. Please go ahead.
Yeah, hi. So with regard to this KSSL again, if you have to look at the related party transaction, what proportion might be coming from Bharat Forge standalone as a part of sales?
KSSL is part of Bharat Forge, man. It's 100%.
No, I'm saying sourcing of components. If you have to look at, is it 70%?
Critical components, which is ordnance and other things which are critical, which nobody else can make, are obviously going to come from Bharat Forge. So I would say in value terms, maybe 30-40% will come from Bharat Forge. Maybe 30%.
Okay. So the remaining 70% will be others and then the value add for KSSL.
Yes, absolutely.
And if I had to look at the Kalyani powertrain, the ramp-up is slower than expected, or what is the status of your new plants and what is holding you back?
Well, one thing is FAME. This whole FAME getting diluted has had an impact on everyone. But please remember that even during those times, we have not misclaimed or wrongly claimed any FAME benefit. We're one of the few companies which has not done this. So, there are a lot of people who are going to have to pay back the money that they have, taken from the government.
Okay. And the last one is with regard to the JS Auto. Post this acquisition, any internal targets in terms of, because you're openly talking about growth outlook of upwards of 25-30%. Has it changed now for a much aggressive because capacity is doubling up and you are getting more client confirmation?
Yeah, so, like I said, this ISML acquisition has just been complete. Maybe in Q3 when we do our analyst meet, we will give you a much better picture on JS Auto and the overall picture. Okay?
Okay, sure. Thanks and all of this.
Yeah, thanks.
Thank you. The next question is from the line of Raghunandan from Nuvama Institutional Equities. Please go ahead.
Thank you, sir, for the opportunity. Firstly, on standalone, raw material cost to revenue, despite higher industrial revenues, there is increase in this RM2 revenue, QOQ and YOY. Any reason for the increase, and how do you see this in coming quarters?
No, basically it's a product mix. Okay. It will normalize over the next 2 quarters.
Got it, sir. On oil and gas segment, there was a one-off impact as you indicated. What would be the revenue for the quarter, or what is your expectation on the full year growth?
Subodh, you want to take that?
Yeah, I will. So, the overall growth for the oil and gas sector will be, I would say, flat as compared to last year. Because the oil and gas sector is strong, but there is a lot of discipline in terms of investments that is happening. The one good thing that is expected by the end of this year, maybe of November, December timeframe, is the demand of oil is expected to outstrip production, and at that point we may see some amount of positive change. But otherwise, we are assuming that it is going to be flat as compared to last year.
Got it, sir. And Subodh, sir, on the North America Class 8, over the past 6 months, Class 8 order backlog has reduced as new orders are lower than the production numbers. and some of the industry experts like America Commercial Transportation are talking about 15 to 20% decline in CY24. Do you expect any weakness next year?
Yeah, as I mentioned earlier, at this point, a lot of the order intake is lower because OEMs are not opening their order book for next year. I mean, you've seen public statements from Daimler Truck, I think about a month ago to that effect. I think Volvo has made similar statements as well. So there is an expectation that these order books will be opened in the near future. I think all the OEMs are talking of a similar year as compared to 23 in 24 as well. So we have to wait and watch. But that's all I can tell you now.
Got it, sir. And just my last question. In terms of investments, they are likely to increase. So what would be the capex expectation in standalone Concall for 24-25? Thank you.
So right now, as I mentioned, for 23-24, 24-25, and probably another 6 months, our capex will be in the region of about 1,000 crores, plus minus 10% combined, and this is the overall capex.
And standalone would be, sir?
Bulk of that will be standalone.
Understood, sir. Thank you so much. I'll come back in the
Standalone meaning India, which includes defense, which includes, everything we do in India.
Got it, sir. Thank you.
Thank you. The next question is from the line of Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Congratulations on a great set of numbers, and thank you for taking my question. The first question, sir, is on the ATAGS piece. So earlier we had the DAC approval, and then last quarter you talked of the AON acceptance of necessity coming through. So the next stage would be an RFQ. Is that the right understanding? And has the RFQ come till now?
RFQ is already out.
Sure. So if one looks at timelines before an order comes through, how would we understand that?
In a realistic world, now it should be less than 6 months.
Sure. And depending on timeline, the delivery of the same.
We can deliver. We have the ability to deliver quite fast.
Sure. Very helpful, sir. The second query was regarding the PV side of it in India. You did indicate that there was a phase out of a model. So the current quarter revenues of around 62.5 crores, is that the run rate we should look forward going for in terms of the trough? Or potentially there was some...
So what he is asking, Mr. Khanna, is that our passenger vehicle India business was at roughly about 62-63 crores. And what do we expect for the quarter and going forward? I think we've lost to both. Maybe I can have him circle back to you, or somebody can get back to you. I think we should get back, because I do know that we have won quite a lot of new business. So we should get back to the previous numbers of closer to 80 crores.
Sure. Perfect. Thank you so much.
Please remember one thing, Mr. Khanna, that we will use the same fungible capacities to make parts for India or exports. If the India business is reducing, we will go, harder on exports.
Sure. Fair enough.
Exports for Pascar are, it's almost 5 times the size of our domestic market.
Right. We did almost 280 crores this quarter. Well noted, sir.
Yeah, thank you.
Amit, I lost for a moment. I'll just add one comment to what you said. We have also, Mr. Khanna, got ourselves on a couple of new programs within India as well. And we are also making a very decisive choice in terms of which segments to play in India as well. So there are a lot of those factors coming in as well, because we want to protect our value creation and its aspects. But overall, we see a reasonable growth pattern for us in the PV segment, both in India and globally as well.
Perfect. Wishing you all the best, sir. Thank you.
Thank you.
Thank you. Before we take the next question, we'd like to inform participants to please limit your question to one per participant. The next question is from Lakshmi Narayanan from Tunga Investments. Please go ahead.
Thank you. A couple of questions. First, in terms of the India CV business, right? What have we maintained or increased our market share?
We have grown our market share.
And what is the approximate tonnage? Do you give the data in terms of automotive CVs or?
No. We only talk about overall tonnage. Which was 67,000 odd tons.
Okay. Sir, and a couple of quarters back, you mentioned that you like to get into things like transmission driveline components in addition to front axle beam and crankshaft, right?
We already make those. And we're in fact expanding our capacities in those areas. We make over 1 million components that go into those products already per year.
Got it. Sir, and in terms of the outlook for both Europe and US in terms of the Class 8 trucks, right? You say that you have capacity visibility, the demand visibility for the next till FY24 or FY25?
Suppose
at this point we have visibility till end of this year and probably 2 quarters or 1.5 to 2 quarters of next year, based on the order books of OEMs. And then as I mentioned,
basically 12 months from now, suppose.
Yeah, roughly. Yeah, that would be easier.
Got it. Thank you, sir. I'll come back in queue.
Thank you. A reminder to participants to please limit your questions to one per participant. The next question is from Rakesh Roy from Omkara Capital. Please go ahead.
Hi, sir. So this one is, sir, can you light on the business? Recently, we get the license from Home Ministry for small arm business, or where we stand and scope of business, sir?
Yeah, with the license, and we will bid for business based on this license.
Okay. We have currently facility for this one?
We have facility for making prototypes. If we get orders, we will set up the facility.
Okay. And sir, we are looking only for domestic market or export also for this one, small arm?
First, domestic.
Okay. Thank you, sir.
Thank you.
Thank you very much. We'll have to take that as the last question. I would now like to hand the conference back to Mr. Amit Kalyani for closing comments.
Ladies and gentlemen, thank you as always for your participation, encouragement, support, and a lot of insight and planning with which you ask us our questions. It keeps us on our toes, and I hope that we're able to answer your questions adequately. We always appreciate your support, and we look forward to continuing our engagement with you. And we will meet soon in the next quarter, if not before that. In the meanwhile, if you all have any specific questions or would like to visit any of our facilities, you're most welcome to reach out to our team. One point that I forgot to mention was that we won a ESG award from the Financial Times and Statista of being one of the Earth's champions. And this goes a long way in our customers recognizing the pioneering work that we are doing on the environment front. And I think that is another factor which will help us in being able to move a lot of business to places like India. Thank you very much. Have a nice day.
Thank you very much. On behalf of Bharat Forge Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.